Hello, and welcome to today's session. My name is Irina Shuchkina, and I lead the membership subcommittee within the Singapore Fintech Association. And on top of that, I also lead the SFA's new initiative, Singapore Fintech Club. The club is a brand new platform just launched less than 3 weeks ago. And the goal of the club is to create an environment where Singapore Fintech professionals can come together to learn, to connect, to debate, to explore partnerships, and to inspire each other. So we already have about a few hundred members from the Singapore FinTech community. And one of the things that we heard from them is that they are looking for relevance and they're looking for opportunities to network and collaborate. In terms of the relevant events, when we started thinking about the topics and themes, one of the first ideas that came to our mind was payments. Payments is the bloodline of the business and commerce, and it's embedded and interconnected with a large share of the other fintech segments and sectors and business models. As for networking, while this event that we're running about payments is now organized virtually, our future sessions will be run mostly physically, with face-to-face discussions and the ability for you or for our members to ask questions, to meet new people, to meet each other, and to interact with like-minded individuals and professionals in the community. So this event, as well as our future events, will be available to the wider Singapore FinTech community, as well as the FinTech Club members. And there's an online platform that I would encourage you to explore. So join us today. Go look up club.singaporefintech.org, sign up to the online community on Slack, and don't miss our future events and announcements. And with that quick intro, I'll pass it to Zennon to kick off an exciting session on payments trends, patterns, and predictions.
Thank you, Irina, and pleasure to be here today to moderate this session. My name is Zennon Kapron. I'm the director of KapronAsia. We are a market research and consulting firm here focused on the financial industry. I think when we look back over the last 2 years, few segments of the financial industry have been impacted less than payments. Whether it be foreign workers that are sending money home or people shopping online, we've seen a dramatic change in the digitization of payments and the way that people are using payments on an everyday basis. I guess the real question here, though, is how much of that is permanent versus temporary? When you look at things like foreign remittances, a friend illustrated the example of going to Lucky Plaza during lockdown, and there was, of course, nobody there sending money home. But as the restrictions loosened, queues started to form again. Why was that? Well, for many of the workers that go and remit money at Lucky Plaza and other remittance centers around Singapore, it was the social aspect that really appealed to them. So in some ways, everything has changed. In some ways, everything stays the same. And so over the course of the panel today and the next hour, we're going to look at some of the trends around payments, both domestically and cross-border. What has changed? What do we expect to see the same? What we expect for regulation and for the future. And so the session today will be divided roughly into those 3 areas. First of all, we're going to start off by looking at consumer behavior, consumers and businesses. So how do they use payments differently and how is that changing? I'm going to take a few minutes then and look at regulations and then close off with the future of the market. I would say that this session is being recorded, so you will be able to view the recording afterwards, and we have enabled Q&A. Although it is in listen-only mode, please use the Q&A functionality within Zoom if you have any questions for our panelists. We have a great panel lined up for today. Rather than introduce each of the panelists, I'd rather let them do it themselves. And to start off, Lawrence, I want to come to you. On this idea of consumer behavior, in your view and your role at Nets, what have you seen to be the differences in consumer behavior over the past couple of years? And what do you see as being permanent versus temporary changes?
Hi, Zennon, and thanks for the opportunity to be here. I have the privilege of leading the Nets Group organization. And to your question, in terms of consumer behavior, what's permanent, what's temporary? Rightly or wrongly, we have a very traditional way of transactions, and that's PIN-based. And even as we go through this pandemic, I'm still amazed with the loyalty of our customers who still use PIN-based transactions. Having said that, we have seen a very sharp increase in the last 12 months on scan to pay, payment with QR. And when you ask the question of permanent versus temporary, I believe that it's permanent and growing. Right? More and more people are getting more comfortable to pay with their mobile. More and more people are more comfortable with the QR, especially with the help. If there's a silver lining, this current situation is, yeah, QRs are used for different things. Trace Together being one of the ways in which people were exposed to QRs, and now payment to a QR is really picking up very fast. So I think that is increasing. That has increased for us significantly, and I believe will continue to increase as we get also more successful in signing up more merchants into commerce with QR payments.
It's interesting about that. Just one quick follow-up on that, Lawrence. I mean, presumably, using a QR, you typically have to open up your phone, you open up your banking app or your digital wallet and pick the option to scan. Whereas with tap and go contactless payments, you typically just look at your phone, it unlocks, and then you swipe, which is arguably somewhat easier. What do you think is fueling that shift to QR payments?
I definitely think tap is a very good user experience as well, whether through your mobile or I think in Singapore, I think tap on the plastic is still more predominant than through the mobile. So tap is definitely a very good user experience. I think what helps with QR is the cost of infrastructure on the seller side, the merchant side, is much easier. And also I think the user experience for the seller, right, in our hawker centers in Singapore, given the fact that there are oily fingers, very busy, perspiring sometimes, and not needing to press a terminal, to press a screen, and yet receive payments and know through your own mobile, through a notification, a loud sound or notification on the screen that payment has been made, really helps because the user experience for the hawker, for the seller, really meets the needs. And thus, there's a higher receptiveness to it. And of course, from a buyer side, even though, yeah, I agree, there could be more steps, as you rightly pointed out, in terms of firing up a bank app, pressing the scan to pay function and then paying. But that one or two more steps doesn't, I think, it's not a hindrance for and thus allowing us to see the both on the buyer and seller side.
It's a really good point. I think, if you spend all of your days working in the CBD, you may think that tap and go is ubiquitous in Singapore because so many of the millennials and the younger generations here use it. But every time I go to a hawker center, I'm reminded that there are many other generations where cash is really the predominant form of payment. And to see that transition to digital over the past 2 years in the hawker centers has been really incredible around that. Samarth, I want to come to you. I mean, Wise, obviously, you have a big footprint globally. You've just recently, last week, went with the IPO. Tell us a little bit more about the changing trends that you're seeing from your customer base.
Absolutely. And just a quick introduction to myself and a little bit about Wise. I think most of the audience would know us formally as TransferWise. But essentially, we're a global technology company building the best way to move money. Our mission is to obviously make it faster, more convenient, transparent, and ultimately, eventually free in terms of moving money cross-border. I lead business development for them here in Asia Pacific. To your question, I agree with a lot of what Lawrence said. I think maybe just taking a step back, what we've definitely seen is customer expectations are changing, and it's a very interesting trend, right? As I was thinking about good analogies and just trying to condense this and make it easier for myself, what it reminded me of was the second law of thermodynamics, which essentially says entropy can never decrease, right? And customer expectations in a similar vein never go back. So once per force, because of COVID, because of the restrictions in physical travel, customers have now become acquainted to using digital channels. They're delivering and getting that convenience, they're getting that speed, they're getting that transparency. And that's now rebasing customer expectations on what they expect from payments, not just domestically, but also internationally, right? So that customer expectation trends towards getting better experiences, more convenient experiences will continue. It's just been accelerated by COVID. What's also very surprising is that while physical travel has been curtailed, there's a lot more online exploration that's happening, right? You're seeing a lot more people do drop shipping, online commerce, passion economy is booming, gig economy coming to place. And all of that is requiring, yes, different use cases, but again, underpinned with that very similar customer expectation of convenience, instant, cheap. And on our side at Wise, what we've seen is maybe just condensing all of that into a very simple metric. Our payouts into wallets, regional wallets, has increased 10x in just the last year, right? So that gives you a sense of the adoption of digital payments and wallets that we're seeing in Southeast Asia. And that's definitely becoming more ubiquitous in terms of how people do payments and think about money, not just domestically, but also cross-border.
That's really interesting about the digital wallets. I hadn't realized that. And I'm impressed that you simplified down a term by quoting a law of thermodynamics. I think that's the first time that I've seen that being used to simplify an idea. But it makes a lot of sense. I mean, it's a changing nature of the way that, people aren't traveling, so it's more about the experience. Joe, I want to come to you. I mean, at the MAS, obviously, you're looking both across consumer and business on this. And what are the dynamics that you've seen when you're looking at the market and kind of the demands from the market during this period?
Thanks so much, Zen. And first and foremost, thank you so much to the Singapore Fintech Association for having me here. It's a pleasure to be here. I head up the Payments Development and Data Connectivity Office here at the MAS. And I also had the great pleasure of working with Irina, Sana, Adrian, and team on setting up the payments group. I heard that response has been really good and encouraging. So thank you so much to the SFA Exco for your very hard work. I think it's no walk in the park. And if we could have a virtual round of applause within the audience for the efforts behind the scenes, I think that would be very much appreciated. But coming back to Zen's question on consumer behavior and looking across both consumers as well as businesses, actually during the pandemic, we saw a distinct shift in consumer and business behavior. Now, Pay Now adoption, for example, has always been quite strong. We are now at 80% saturation points for adult Singapore residents on Pay Now, as well as about 85% of active businesses on Pay Now Corporate. And in fact, last year, we saw double the number of registrations for Pay Now Corporate. So that gives you an idea as to the digitalization shift that happened when we all had to work and live remotely. But none of this is as strong as the evidence for which falling check and cash usage has shown us. So I'm going to look off screen to read you some of this data because I think it's quite interesting. And since this session is being recorded, let me not give you wrong data. And this is quite up to date. So the ratio of check volumes relative to e-payment volumes actually dropped from 32% in 2016 to 12% last year in 2020. So that's quite a big dip. And the value of ATM cash withdrawals relative to fast and card payments has also been falling, 31% in 2018 to 16% last year. So the absolute value of ATM cash withdrawals fell by a record 12.3 billion last year. So that was a significant 1.5 times drop compared to 2019. That's it. I think we are not in the business of going cashless for the sake of it or e-payments for the sake of it. Rather, we want to enable those who wish to adopt e-payments and digitalization do so. And that's been our efforts in that area. And also we are quite cognizant that there are pockets of our population who would still want to use cash, like you mentioned, Zen, earlier at the hawker centers. We do still see a growing market of those who would like to use QR payments like myself, but also those who still want to use cash, and we will continue to look after them. For example, the ATM touch points have actually risen in the past 5 years, even as cash usage has come down. So we are now at 4,100 touch points, ATM and cash withdrawal touch points, compared to 3,007 about 5 years ago. So our e-payments journey does look after both the tech savvy as well as the ones who still prefer to use cash. But we do see a distinct shift in consumer behavior accelerated by the pandemic.
That's a really interesting point. I mean, that shift in dynamics is challenging for the entire industry. I mean, I think about the Hawker Center near where I live, and there used to be one of the big three at a branch there, a bank branch, and over the past year, they've closed that down, presumably down to low traffic and I guess less profitability. So it's, despite Singapore being a very small environment, at the same time, you know, the banks need to cover it in terms of having branches and outlets there for the people that are not necessarily shifting digital or just need cash for Chinese New Year or whatever the case may be. So it's a real challenge, I think, for the traditional financial institutions out there. To get a little bit more tactical in the changes around payments, Jeremy, I want to come to you. I mean, what have you seen around the usage around payments? I mean, we talked a little bit before, you and I, about you know, using rewards to buy things like on Fave or Grab. What have you noticed in your role in terms of the changes around the actual tactical aspect of making digital payments?
Yeah. Thank you. So just a brief introduction myself to the audience here. My name is Jeremy. I'm a CEO of Liquid Group. So we are predominantly a QR payment platform. So dive straight into this question that you mentioned. So also to echo the rest of the panelists here, yes, we see a marked shift towards digital payments. And I'm going to specifically focus on QR. You asked the question, why QR and not tap? And I think that sort of answers a little, it leads into the kind of services that we are seeing. So I think everybody concedes that a tap is probably the most convenient thing that we can do. We can tap an EasyLink card, we can tap a Visa Wave, a MasterPass. You know, it's a contactless, it's tap, it's fast. So inherent in that is the speed, and all of us concede that that's the fastest thing ever. But the thing about it is, a tap is the end of a transaction. I'll let it sink in for a while. When you tap, it completes a transaction, the amount is done, everything is sorted, you tap it and you go. A QR, which is the optical payment instrument, is the start of a transaction. You scan something and something starts. It could be a payment, it could be an amount that you see and you pay immediately, or it could be an amount you enter, which sort of enters very nicely into how you say what we have seen in terms of rewards and rebates and stuff. So when you scan something or you just scanned on something, something pops up and it begins what we call pre-processing. It begins, you know, a person can redeem a point, they can, you know, apply a loan, they can quickly check for a certain risk status. A lot of little things, micro, some of them obvious to consumers, some of them not so. And all these concurrent processing that happens with a QR is what makes the QR payment experience a lot more interesting. So I don't even call it QR now, I call it optical payments, because you can scan an item and pay. You can scan a barcode and it triggers something. But that's what we see. I mean, there are two levels of deployment, as you see. The national level, as Joe has mentioned, has been very, very successful. Pay now on a large scale rollout, that's happening. But I think at the fringes, or as the innovative hub evolves, you see all these new stuff coming in from all the digital wallets. And I think that's where the magical median will be. I mean, in terms of why tap versus optical payments, all these various use cases are starting to come into the market in wallets, really. And that's something that we think will stay, because it inherently changes the whole entire buying behavior, actually.
Yeah, it's interesting that I mean, in certain ways, the optical payments are better for merchants because you can kind of push more products and services down the line. And at the same time, for consumers, they're able to kind of see additional coupons or rebates or the things that they might be able to use in that transaction. So, you know, from both sides, it's kind of a more complete transaction. Would it be safe to call it that, Jeremy?
Yep. It basically, the little things that you would probably want to do when you scan. So I think points and vouchers are what I mentioned, because that's the most obvious to a lot of people, because you scan. Imagine a bank has to roll out a point redemption system. I'm not going to quote the bank, and because we run it on cross-border, I would say that it's not even a Singapore bank who's doing it. But banks who have loyalty points will have to go and sign up merchants and install on their terminals and have this special system that when you spend your card, the cashier will ask, do you want to redeem your point? And then, you know, there's a whole bunch of things that can be done on a card system, right? On a QR or optical system, no. Any merchant that they scan, they can redeem the point at the point of purchase, even without the merchant knowing it. So that's just one service that the banks are rolling out. So you can imagine it's not just that service, it's the framework that supports that service, all this pre-processing that can be done. And it's interesting because it's like 1,000 flowers blooming at the same time. Unfortunately, it's everybody is focusing on the cash and coin element to it, which is true. I mean, it is contactless. It is literally a meter apart, so it's even more contactless than NFC, more fit for COVID. But in that sense, there is a lot of these new services that the banks and wallets are innovatively putting on top of their payment transaction flows itself.
It's really interesting. I mean, before I came to Singapore, I was living in China for 14 years. So I went through the whole Alipay and WeChat Pay, and really the fuel for that transition was the lack of better alternatives. But here in Singapore, it's almost, you're spoiled for choice in terms of how you want to pay, either physically at the point of sale or online. And so it's what can you offer around that that seems to make a difference. Lawrence, I want to come to you. I mean, we've talked about the changes that we've seen from the consumers and from the customers in general. For you as a provider, how has that changed the way that you look at the market and the way that Nets offers services? I mean, how does it change your way of thinking about the market?
So I think we are in a very privileged position in terms of our payment infrastructure for offline in Singapore, right? We definitely have a huge opportunity online. And some may say we may be a bit too slow, too late, because the pandemic may be over soon, or at least we're all hoping so. But we do believe that, as I shared earlier on, we still have so many loyal customers that use us even on PIN today, right? That if we provide them opportunity to use us online, we can meet the needs of these customers, which today, rightly or wrongly, they're not maybe fully met, right? So for us to be more relevant, it's not that we're not present online. Of course, we are present online, but we're not nowhere near the, if I may use the overused word of ubiquitous. We're not that ubiquitous online as we are offline. And there's a huge opportunity for us to do that. That is something that we have started working with our banks and improving our product offering, so that with the several products that we have online, we are in this last 1 year, been able to increase our share slightly, but there's much more we can do from a UX standpoint to make our products even more relevant for consumers online.
Yeah, that makes a lot of sense. Lawrence, just sticking with you for a second, I mean, what do you feel, if you were to look back at the beginning of this pandemic, what do you feel that it would have been, although Nets has made a lot of progress over the past couple of years, what do you feel like you were missing at the beginning of the pandemic that you wish you would have had to be kind of better prepared for this market change?
I mean, it's the same point on online. I think we have, again, the privilege of serving a lot of long tail merchants, smaller merchants, whether through QR or even through our terminal, whether it's tap or PIN. And if we are able to be more relevant online, we can help them even better, better serve them, better serve our merchant community by having the right payment option for them to use when they go online. Today, and I know payments is only a small proportion of commerce, especially if they want to move from off to online. But I think that is something that we have improved a little bit, but there's still a long way for us to go to be able to service the offline customers who use us, to provide them the option to go online.
Yeah, makes sense. Samarth, I want to come to you. I mean, for Wise, largely the company was an online business, although you do have physical cards. I mean, how did the company strategy change over this past couple of years? As much as you can relate it to Southeast Asia, but with these changes in demands from consumers and businesses, how did that change Wise's approach to the market and the products and services that you were offering?
Yeah, very interesting question. And I think while we've touched upon the customer expectations changing, Jeremy brought up a very interesting point of saying, look, a lot of the form factors and how customers do payments, they're changing, and there's a lot of innovation that's happening there. What we also realized was, just for cross-border remittances, the infrastructure that exists today is fairly traditional. It's not geared to really have those high STP, high frequency transfers go through instantly end to end. And what that resulted in was that customer expectations were evolving rapidly, but businesses, platforms, even banks were not able to necessarily respond to that quickly enough. And so we saw this increased demand for partnerships, for collaboration, for really wanting to understand how we as fintechs have solved that and to use our platform, build into the infrastructure that we've created over the last 10 years and tap into that to offer services to their customers, right? And it's not just been related to payments per se. We started interacting with businesses that were in adjacent lifestyle businesses, but wanted to embed payments. So they came to us and said, hey, we want to try and build a cross-border remittance feature that's embedded within our applications. What do you have to offer? So I think building API first, continuing to keep that customer in front and center for everything that we were doing has paid off. We obviously continue to invest in our platform, and that's been one area of growth and an opportunity that we've seen increase in terms of the openness for partnerships from incumbent banks like the Shinhan Bank in South Korea, from SMB banks or neobanks like Aspire in Singapore, to really deliver on these fast-moving customer expectations and treat partnerships as a viable opportunity there. And there are businesses that have essentially just used our APIs and embedded them. So like a florist, I think they run a marketplace. They used our APIs to do cross-border payments, 2,000 transactions at a time, just using our APIs. In our recent Mission Days update, which is essentially the company coming together, assessing where we are in terms of our mission, we built out an API functionality, hacked it together for an individual customer who wanted to code and build on top of the product that we had. So I think building and opening up more of the features, more of our products in a manner that allows for partners, for people, for businesses to build on top of us has been a key focus for us in the last year or so.
Well, just following up on that, I mean, what is your experience in terms of why can't the traditional financial players do this themselves? I mean, you have many of the banks that you mentioned presumably have an existing cross-border business. They have large transaction flows, especially in the more popular corridors. What is Wise bringing to the table that the banks can't do themselves?
Yeah, I think what we've done is, look, the legacy infrastructure has been in place for a long time, right? It's been made efficient for a certain type of transfers, and the payment mechanisms, the payment ticket sizes, the use cases have evolved quite drastically and rapidly. And that infrastructure hasn't really changed and innovated as quickly enough, right? From a Wise perspective, what we recognized was that domestic payment rails, thanks to the work that Joe, Lawrence, and team have been doing in each of these markets, have advanced quite drastically. You have faster payment rails in a lot of these markets. It's just a matter of getting and stitching all of them together. And that's where we've built over the last 10 years, right? How do you take the advancements that are happening locally in each of the market domestically, combine them together through different ways, different technologies, so that from a customer standpoint, from a use case standpoint, the flow is still as seamless as you would do a domestic transfer, right? The complexity is almost abstracted away from the customer, from the person using and sending this money. And that's where I think our core differentiation lies in terms of how we've been able to enable that transparency, that low cost, even for cross-border transfers.
Yeah, it's a good point. I mean, I think, when you look domestically at many of these markets across Asia, they're very advanced, but that cross-border interconnectivity just isn't there in terms of payments. Although we are starting to see the bilateral relationships that we'll talk about a little bit later in terms of Thailand connecting with Singapore with Prompt Pay and Fast. Just a reminder to all the participants on, we have a tremendous number of you on. Please do ask any questions that you have. All of the panelists and their PR teams have guaranteed that they'll answer any question that you pose. So please take advantage of having them all on the line at the same time. Jeremy, I want to come back to you. I mean, Samarth kind of kicked this off a little bit with embedded finance. We talked a little bit about it in terms of points, but what is the role of ancillary services? I mean, obviously one of the big ones here in Singapore right now that's receiving a lot of attention is buy now, pay later. both in terms of regulatory attention, which we'll get to in a minute, and then funding for some of the players here in the market. What do you see as the role of these ancillary services in the payment transaction, whether that be offline or online?
I think the BNPL trend is basically in a little bit leveraging what I mentioned just now, the pre-processing, right? Because you can intercept the transaction, you are now able to offer a facility, a lending. But lending facilities aren't exactly new. I think in a credit card, whether it's a consumer finance or you're financing the receivables of a merchant, it's not new. The delivery channel is new. And the fact that you can do it digitally and, I mean, we've heard jokes about people being able to scan a QR of a car and then buy it. Let me get your home loan approved in 2 seconds. I mean, the delivery channel has changed. So little things like that will be, and BNPL falls under that category. But because it bears resemblance to a couple of existing financial products, so I'll leave Joe to jump in on that one, because at the end of the day, it's a lending product, and for us who have been in industry for a bit, you will roughly know what's going to happen in terms of a regulatory framework that will be expanded to cover it. I think that's where we are. But nevertheless, the innovation came because the technology platform is loosened. It's built hooks and allow people to intercept and do new things. One other thing to say, why couldn't the banks versus digital fintechs? I think it's interesting competition between the two, right? The fintechs are trying to scale, and the banks are just trying to get faster. So this are the two things. The fintechs by nature are just faster. So in a sense, and I guess that's where banks irritates. Where it irritates the banks the most, the speed. I think ideas in shared forums like this, you will realize that a lot of, like, even where Samarth is saying and what his strategy is across executing of real-time payment rails and putting everything together on API. I mean, everybody's been quite clear about the strategy, but the beauty of some guys like even like Wise, and I'll give you kudos for that, is the ability to pull it off at such speed. And that's where the banks are staring at. But the banks do have scale. I mean, let's not diminish any of the large billion-dollar boys out there. But that's one of the key differences, and everybody's measured differently, I guess.
Yeah.
Back to Joe for BNPL, I guess I will not comment on the regulatory element to it, but it is a result of the disruption in ecosystem. But the product is still, it's a lending product.
Yeah, Joe, I mean, that's a perfect segue. Let me come to you about regulations. I mean, if you can talk first maybe about buy now, pay later, and then kind of expand a little bit beyond that. I mean, obviously with PSA now in place, I mean, what is next for regulations and what needs to be done?
Yeah, thanks very much. And indeed, Jeremy is absolutely right. I agree that, lending is, of course, not new, right? It's only the manner of delivery that has changed. And we watched this space with a lot of interest. And I think that it's been quite clever, because the delivery of that service has now been brought forward to the point of payments, to the point where the customer is making a decision on whether or not to make that purchase, and then the offer of the credit facility comes up. So it's quite intuitive. You stand in line, or I stand in line, confessions of a shopaholic at Zara. I have a few pieces of clothing. And you always have that deliberation in your mind. Should I return some items and just buy a few, or should I buy them all, right? And then you get to the till, and you see that the afterpay or the karma service is available. Your BNPL is available. Traditionally, what would you have received as a credit facility from your bank, for example? It may very well be after you have already made the payment, then you get the SMS to say that, okay, you've made this payment. Do you want to then convert it into several installments? But mind you, by that time, you had already made the decision to make that purchase, whereas the buy now, pay later offer comes as you are making the decision to pay. So it is this particular shift in the delivery that we have also been watching with great interest. And having this conversation with our regulatory folks, our regulatory colleagues, there is some, of course, natural concern that consumers may overstretch themselves. They, being Joe in the Zara queue, may forget that the debt will catch up with them. It is still a debt. And you know that the credit regulations in Singapore are fairly fragmented. They are split across several pieces of legislation being administered by different agencies. MAS, for example, Banking Act, the MinLaw, for example, Moneylenders Act. So our regulatory colleagues are studying this very closely with colleagues in other agencies and seeing if there is a way to mitigate the risk, but also to preserve a bit of that innovation space for such services to continue offering conveniences in a risk mitigated way to consumers. So that balance has to be carefully created. And yeah, this is a bit of a long segment for me, but coming to, I suppose, the Payment Services Act. And well, the Payment Services Act, you know, is a matter quite close to my heart. Me and the team, we spent a good couple of years building it up from scratch. It was an exciting time before we handed it over to the newly formed Payments Department. And on that front, I would say that we were always watching out for emerging services and activities. For example, I think key of which would be stablecoin activities, which has really come to the fore. You know that we have seen a lot of activity and innovation in global stablecoins, for example. You would have noticed that we have expanded the scope of regulated activities under the Payment Services Act to align with FATF on the regulated scope of VSPs, like custody, broking of digital payment tokens. So those changes were passed in Parliament early last year and are likely to come into force at the end of the year when the subsidiary legislation is ready. And as for stablecoins, the thinking is that we probably need new rules for stablecoins because the existing stablecoins fall within a space between e-money and digital payment tokens. It may not fall neatly between within one or the other. So it's likely that new rules need to be made for this, and that's probably going to be the backbone of the next Payment Services Act amendment. We are looking at other regulations around the world, like the Financial Stability Board's recommendations in this area. We are also looking at the EU MiCA. Of course, there's been some chatter on MiCA about whether or not those regulations are appropriate for the regulation of stable coins. And I think the team will take on board those comments as well as the recommendations and put together, as usual, a consultation paper for which we highly encourage those who are in this space to actively give your feedback, because the MES team reads all your comments, every one of them, and takes the comments very seriously. Yeah, back to you, Zen.
That's great. Thanks, Joe. And there were numerous questions on stablecoins, and you managed to knock off quite a few of them at once. I mean, that idea of stablecoins, I mean, that kind of brings us to the last part of our discussion, which seems amazing. I mean, this has flown by the first 40 minutes of this, but kind of looking forward at the future of this. And some of the questions that have been coming in are very practical. Lawrence, for this first one, I want to come to you on this. And this question comes in and how to maintain the stickiness towards digital payments for long tail merchants once the pandemic is over. So, you know, assuming that they have a tendency to switch to cash, you know, how do we maintain that level of digital penetration in places like hawker centers, as an example, or do you think that's just embedded and habits will change?
I think habits are forming now, and habits will remain. Whether or not it would drop back to what it was before the pandemic, I don't think so. But there's definitely much more we can do to show the value of digital payments as well to both the buyer and the seller, right? So I think in terms of improving user experience, I don't think we are at the optimal user experience now for both the hawker or the merchant and the buyer, as you mentioned earlier on, in terms of firing up your bank app, making another 2 clicks before you reach the opportunity to scan and pay. I think there's so much more we can do from now till before things get better to try to cement this and even increase our penetration. I think UX is really key for both the buyer and the seller, and how we manage this over time would be very important. I mean we're doing a few things now in terms of trying to promote hawker payment. The more hawker transactions you do, we're giving us the incentive not to the buyer but to the hawker to help out the hawkers during the situation. But it's tactical but necessary. Like, will it change behavior over time? Probably not, but it does add to the momentum of things building up. So I think the short answer is UX. We are focusing on how we can improve the UX, improving the relevance of digital payments in terms of reconciliation, how it becomes easier for them to reconcile, how it becomes easier when they start collecting less cash, how do they pay their suppliers, how we're looking at that as well to make sure that they are not disadvantaged the more digital payments they collect. When it comes to paying the suppliers the next morning for the kway teow because they have to fry the char kway teow and the next day and how we make that more seamless. So there's much more we can do with the whole ecosystem and not just focus on the front end in terms of making it easy, making it sticky over the long term.
Yeah, that's a good point. Anyway, interesting to compare and contrast to China, where at the very beginning there were incentives for the consumers and for the merchants, and then as merchants saw the benefits of using the platform, they were able to, Alipay and WeChat Pay were able to drop the incentives because the stickiness was there. Jeremy, I want to come to you on this. I mean, this is one of the questions that's also come through, kind of tying into what we just asked Lawrence. I mean, there's incentives like free terminal rentals and waivers and merchant fees. Do you expect, I mean, would you agree with Lawrence that, will we be able to kind of embed these habits such that merchants won't revert back to the norm? Maybe you can talk a little bit more about the optical payment side as well.
Really depends what kind of merchant and ticket size you're talking to. So, I mean, if the reason why, cash and coins were the hardest to replace, I think, this is one of those things. You have a luxury store that will pay 2-3% for payment. You go to a hawker and you charge him something percent and they'll say no. And the reason is quite straightforward. It's because he's not at risk of losing his sale if he doesn't accept e-payment. So if the coffee is if it's a $1 coffee or it's a $3 fried rice, if he doesn't accept e-payment, he's betting that you have it in your wallet, right, or in your pocket, right, your coins. I mean, if you're doing a luxury good and the thing is $4,000 and you don't take coins, chances are you lost that sale. You don't take e-payments, you've lost that sale. So as the market, and this is something that probably we have to look at, is for the hawker market and for markets where there's very, very, very low transaction volume, and any cost increment will obviously cause them to rethink, because at the end of the day, they think that it is fundamentally cheaper to take cash and coins because there's no fees, there's no interim cost to it. But as a whole, the ecosystem is actually a lot more expensive. The actual ATMs, the cash and coins, and that is a cost itself. So I would look at it as a very guarded statement. I mean, we know hawkers are very practical, salt of the earth people, or if you remove incentives, or you start charging, it's not about removing incentives, you start charging them, it's going to be quite interesting language we're going to get from the ground. But it's also mindful that they're not being unreasonable as well, because it's a $3 transaction. You have it in your pocket. Why should he pay for it? And to be fair, the cost to service that $3 transaction, as some banks may have pointed out, it's not cheap either. I mean, so we have to balance, as it's not cashless for the sake of going cashless. So at some point in time, that the free market in that sense has to come into play, and a good equilibrium will be found. But if it's a plain a statement of whether removing a certain incentive will cause changes, the smaller the ticket item, I would say yes. The rest shouldn't. The behavior has changed. I mean, I stare at that bowl of coins at my house I have at home every day, right? And the good thing about it, I realize, is that it hasn't grown. So that's the only difference. I still have that bowl. Its legacy, it has not changed. Every time I go out, I come back with some coins. I don't bring coins when I go out. I put it in a bowl. And the next time I come back with more coins, I put it in a bowl. And at some point in time, that bowl is just, I bet you have one too. You have, all of us have a bowl of coins at home. So the behavior has changed. But how much when you start when monetary costs that's being pushed onto merchants, I think we have to be very, very gentle and very careful how that translates. Yeah.
Really good point. I think that bowl of coins is our own personal legacy infrastructure that we keep at home as well. I'm guilty of that certainly as well. Samarth, I want to come to you. I mean, we've been talking about the domestic use case of keeping merchants using this. If you could comment, first of all, on how you plan on keeping, the international payments digital as opposed to people going back to cash, like what I mentioned at the beginning with, going to Lucky Plaza to do the payments. And then one of the questions that's come through from the audience is, given that there's multiple choice of PSPs and cross-border payments like Wise, Remitly, Instagram, et cetera, with margins razor thin, how do you gain market share and still be profitable? So I think, that was explained a lot with your IPO last week, but maybe you could talk about that a little bit as well.
Sure. So I think on the stickiness point, and I think Lawrence and Jeremy both brought this out, right? It's really understanding the value that your product is driving to your customers and being able to convey that in a manner that's easy for them to understand, right? And something as simple as calling out what is the fee for a remittance that's being provided by Wise, what is the delivery estimate reaching the recipient in 20 seconds. Stuff like that is really empowering in terms of giving customers the information upfront to make a choice that they, giving them all the information to make the right choice, right? So I think from a product standpoint, by being very close to our customers, we continue to iterate and understand what are the specific pain points that our customers face when they go through different use cases, when they're trying to send salaries, make payments, but also continue to expand our coverage, give them more optionality, give them more convenience in terms of having wallets that they can send money instantly into. So that, again, from a mode of use of value, it's going into a form factor that's very easily used in these markets instead of just sitting in a bank account or going to a card, right? So being very cognizant of what are the different use cases that our customers are using us for and building that into the product definitely drives stickiness and value that the customers will see. I think in terms of, there is no, it is a service that we're providing. There is a very transparent fee that customers upfront pay for the remittance. And yes, as volumes increase, as the ecosystem inefficiencies move away, that price will continue to come down. And that is good for the entire ecosystem. And the reality is that once you have that base infrastructure in place, you tend to see a lot more use cases, a lot more innovation being built on top of that, which is what drives value to the entire ecosystem. So that's always been our thinking in terms of continuously, and it's not an easy battle, right? Engineering away these inefficiencies takes time. We've done this over the last 10 years. We've got into a stage and we will continue pushing that envelope lower.
Great, thanks. One follow-up question to that, Samarth. I mean, you were referring a little bit to the consumer side of things, which I think partially applies to B2B, but when you look at B2B payments, I mean, what's coming down the line for Wise in terms of helping B2B, helping businesses send money?
Yeah, quite a few things. I think our APIs, the batch payments, our bank feed integration. So there's different, SMB is, I think, probably the biggest generalization that you tend to see going around, right? SMBs can range from single office owners to all the way to a 5-10 employee strong organization to an organization that's a multinational SMB. So I think different SMBs have different cross-currency needs, and understanding what those are is very important before you even get down to understanding what you should be building for them. I think more broadly, we've published our roadmap, which is now public, for what we're building towards in the last year. In the next year. And a lot of the focus is going to be on how do we enable businesses to conduct their cross-currency transfers seamlessly and essentially be the only account that they require to go international.
That makes a lot of sense. Joe, I mean, sticking with the cross-border element of this, maybe you can comment a little bit in general. I mean, Singapore being, a financial center, obviously in Southeast Asia, we started to see this cross-border interoperability between PromptPay and PayNow. What is Singapore's role going forward in cross-border payments and kind of that interoperability? Are we going to see more of the Singapore-Thailand tie-ups in terms of cross-border QR? What do you see the role of Singapore and indeed the MAS within that?
Yeah, thanks, Dan. So we were quite encouraged by the good take-up of the Prompt Pay Now linkage, especially as you can see from the consumer experience. I think the efforts have paid off in making that experience so seamless. It seems like a domestic payment, like when it was launched. Of course, we and our Thai colleagues were very excited transferring money to each other and found the experience so seamless. It was as though it was domestic. So I think we'll continue with that momentum in building similar cross-border payment links, starting with continuing the faster payment linkages with countries that are strategic to us, where the remittance corridors are quite strong, demand is quite high, and where, of course, it's easier to connect with countries that already have a mature, faster payment system, as well as digital infrastructure that has made this whole process a lot more seamless and easier to connect. But beyond just connecting faster payment systems together, we are also interested in how multi-jurisdiction cross-border payments can be achieved. And with this, we have been working with the BIS Innovation Hub to see how such a system could be put forward for consideration by other jurisdictions, as well as exploring the maybe more cutting-edge part of payments being wholesale CBDCs. We have done quite a bit of experimentation on that. So all that should come together, we hope, with our partners to bring forward a blueprint for the future of payments. You know that it's complicated stuff, linking two systems together. It's even more complicated if we want to link multiple systems together. But that's something we're working on, and we are trying hard to pave a new way forward.
Joe, maybe a quick plug. You guys are also doing, the MAS is doing a CBDC hackathon at the moment, correct?
Yes, that's right. Yeah, thanks so much for the opportunity to raise that. Indeed, the submission period is still open. We had the pleasure of co-crafting the problem statements with some industry partners, and we hope to see some good interest in that. It is a global CBDC retail payments, retail CBDC challenge. So it's not just for Singapore, but rather a baseline sort of framework that we invite solution providers to participate in, for which the winners, the finalists will be announced at the Singapore Fintech Festival. So it's quite interesting to see, especially if you have a chance to look at the problem statements. They are crafted in ways where we see natural tensions, for example, privacy versus AML CFT controls. So highly encourage everyone to take a look at that. And we do look forward to some interesting solutions coming forward from that.
Great. Lawrence, I want to come back to you now with the interoperability side of things, both here domestically and cross-border. What is the view at NETS, and what do you see as the future of interoperability?
So I think it depends on how you define interoperability. I think in Singapore, led by MES, IMD, we have SG QR, right? I think from that point of view, where we have one QR, different payloads that can be read on one QR, it still requires the payment option to sign up the merchant. And of course, NETS is one of the, I would like to say one of the bigger players in terms of signing up merchants and putting our payload into the SG QR. And of course, we have one of our legal entities, BCS, who helps with the being the bin for SG QR. I think that is working for us so far. Of course, more can be done to simplify and clean up. But from an interoperability standpoint, I don't see us, I could be wrong, but within my vision, I don't see us moving to a state where one QR, where anybody can scan the QR without signing up that merchant, right? So I think that signing up the merchant and allowing that competition for different payment options to sign up that merchant, offer different services, and merchants having the choice to sign up one or more payloads onto their QR, I think it's a good choice for merchants to have. Right? So I think where we are today is we are trying to push for that. And of course, we've spoken a little bit about cross-border as well. And and going back to your question, you asked earlier on, when the pandemic started, was there something we wish we did better? Now, when the pandemic, as we are approaching, hopefully towards maybe the end, not the beginning of the pandemic, is there something we hope that we'll be ready for? And we are trying to make up for lost time in terms of trying to have many more bilateral conversations so that our QRs in Singapore can be used when people come in from different countries. And we're also helping some of our local banks so that when their bank apps go overseas, they will be able to scan different QRs when they are overseas as well. So in terms of being able to scan the payload on different QRs is something that we are working on. But I don't think we are moving towards one QR, one payload, and any bank app or any wallet that scans it should be able to transact.
Yeah, it'll be interesting to see how that progresses in other countries. I believe Indonesia is looking at it, and Malaysia as well. But I can understand the challenges behind that. Right before I hand back to Irina for some closing words, one last question has come in over the Q&A here, and it's about financial inclusion. And this is open to anybody who is on the call and might want to answer this, but how do you see the future of early stage fintech startups allowing offline payment solutions to serve the underserved or underbanked? And I think this is especially relevant. I mean, we've had this discussion about optical and QR codes, as well as the Sustainable Development Goals of the UNDP. Does anybody have a comment about how we see that playing out and the role of digital payments in enabling that financial inclusion, probably specifically within Southeast Asia? Feel free to raise your hand and answer, whoever might have an idea.
Maybe if I could sort of jump in onto this first. I think, as you mentioned, it's digital infrastructure. So in that sense, the financial inclusion and digital infrastructure using your mobile wallets and QRs and optical payments, they are literally digital costs. It's a very low, there's not a physical cost you need to put out, there's not an ATM you need to put, there's not cash handling. So in that sense, the base premise of the fact that debt is a low cost infrastructure that on paper should drive financial inclusion. I mean, it's so much cheaper for financial institutions to service the unbanked and make them banked. They may not need a passbook, they may not need a card, but if they have a wallet digitally, and they will be able to render financial services to them. But the caveat that we always like to say, and because, like I said, we're a cross-border guy, so we see what happens in Indo and we see what happens to Thailand, is that the digital infrastructure has to be in place. And sometimes we might take it for granted, like digital payments will be amazing for financial inclusion, but you need that digital infrastructure in place. I think a few of us, 2 years ago before wonderful COVID, I think a few of us were in Nairobi, right? And one of the things that, talking to Safaricom, and they were trying to roll out the M-Pesa, and there still has certain amounts on feature phones. And they have a migration plan from feature phones to smartphones. And the biggest debate that a lot of them had at that time was, do you build something for the future in 2-3 years, or you build something that you can service now to achieve maximum financial inclusion? And it's not an easy answer. In Southeast Asia alone, the infrastructure has to catch up, and the metrics and the reports from very distinguished economists and even the World Bank says it is catching up. So the assumption is it will assist in financial inclusion because it's so much cheaper. I mean, everybody has a mobile phone. So in that sense, if that mobile phone is now a smartphone, and if that all becomes an account, I think Southeast Asia will look a lot different. I think in terms of the accessibility to funds will look a lot different. And I eagerly await how that will evolve, really. Yeah. So the short answer is yes.
Yes. That's a great way to wrap it up. Thank you so much, Jeremy. And thank you to all of the panelists, Jeremy, Joe, Samarth, Lawrence. I think we covered quite a bit on this, everything from letting the free market decide to whether we should be using cash or digital payments, to the precepts of thermodynamics, which I never thought we'd cover, but we did. So thank you so much for your time. We really appreciate it. We have a number of questions in the background. We will respond to those over email post the webinar. And with that, let me pass it back to Irina for a couple of closing words. Thank you.
Right. Well, thank you very much for a wonderful session. As a reminder, the session recording will be made available on our social media channels, YouTube as well as LinkedIn. And I also wanted to invite the audience to join our next events. So our next 3 events, the Singapore Fintech Club's events, will be exclusively available only to the members. And the next one is actually quite exciting, something I'm really looking forward to. It's the Fintech Dinners. So this is when we will be bringing together the community within the permissible format, meaning that we'll have to split them in groups of 5. And we'll have reservations all over the city in different, locations, some of my favorite places for sure. And that is going to be our first physical networking event. And then the following week, July 29th, we're having a coffee chat with the Chief Fintech Officer, Sopnando Mahanti, another closed door event available for Singapore Fintech Club members. Please join the club to make sure that you are able to ask all the questions. And then finally, August 3rd is the day when we would be running a free legal clinic with our partner, Allen and Gladhill. So answering all of the questions on the licensing, the regulations, the legal term sheets, templates, and other useful, insights from a very knowledgeable and very professional law firm. So with that, thank you so much for joining us today. And stay tuned for more exciting events and knowledge sharing
sessions. Looking forward to seeing you all on the digital platform. See you. Thank you.
Thanks.
Bye.
Thanks.